Many of America's working families have been hit hard financially by the effects of the coronavirus. If elected president, this is how Joe Biden plans to change the tax code and help the families that make up the fabric of American society. Hello and welcome to Practical Personal Finance. My name is Andrew Shear, and this is where I give you the information you need to understand and succeed with money. With Election Day now just weeks away, it's time to wrap up this series on Joe Biden's tax plan with Part 3, how Joe Biden would like to use tax credits to help working families. Before I get into the details, do me a favor and hit that like button. And if you're new here, hit that subscribe button too. You never know, you might learn something new about money. The three aspects of Joe Biden's plan for tax reform that I will cover today involve the Child and Dependent Care Tax Credit, the similarly named Child Tax Credit, and the return of the First-Time Homebuyers Tax Credit. Just like in Parts 1 and 2, I'll fill you in on how taxes currently work, the changes Joe Biden would like to make, and who will be affected. At the end, I'll give you my thoughts on whether the changes will make things better or worse. A quick note before we get started. I'm sure you can tell there's going to be a lot of information about tax credits today, which are different than tax deductions. A tax deduction is when you subtract a certain amount of money from your income, which in turn reduces the amount of tax you need to pay by a percentage of that amount, depending on what tax bracket you're in. A tax credit is when you subtract a certain amount of money straight from the tax you need to pay. Generally speaking, tax credits are far more valuable than tax deductions. The first change I'll be discussing today involves the Child and Dependent Care Tax Credit. If you have a child under the age of 13 and need to pay for someone to take care of that child while you're working, you would qualify for this tax credit from the federal government. If you qualify, the way it works is for up to a certain amount of spending for childcare, you get a certain percentage of that spending back in the form of a tax credit. Currently, the maximum amount of qualified spending is $3,000 for one child or $6,000 for multiple children. And the percentage you get as a tax credit is anywhere from 20% to 35% depending on your income. As an example, if you spent $6,000 on childcare for your two children and you had a low enough income, you could qualify for a tax credit of $2,100 per year. Joe Biden would like to increase this tax credit, both for the amount of qualified spending and for the maximum percentage of that spending that can be claimed as a credit. Joe's plan is to increase the qualified spending from $3,000 for one child or $6,000 for multiple children to $8,000 for one child or $16,000 for multiple children. On top of that, he wants to increase the maximum percentage for low-income households from 35% to 50%. So for example, if you spent $16,000 on childcare for your two children and you had a low enough income, you could qualify for a tax credit of $8,000 per year. The cost of the plan is estimated to be about $8 billion per year over the next 10 years. This is a huge deal for working class families who send their children to daycare or after school care. It will allow them to reduce their tax burden and, in some cases, avoid making sacrifices in their careers due to the high costs of childcare. Regardless of your income level, if you have a child or other dependent below the age of 13 and you pay for daycare, after school care, or daily summer camps, there's a very good chance you will benefit to the tune of thousands of dollars from this change. And that's something to get excited about. The second change I'll discuss today has to do with increasing the child tax credit. It's easy to confuse this one with the Child and Dependent Care Tax Credit, which we just discussed, because the names are so similar. But these tax credits are in fact different. The way the child tax credit works right now is if you have a child age 16 or under who you claim as a dependent, you get a tax credit of $2,000 per child per year. Pretty simple. Joe Biden wants to expand this tax credit in three ways. First, he wants to increase the maximum age from 16 to 17 for a child to qualify for the credit. Second, he wants to increase the credit from $2,000 per child to $3,000 per child. And third, he wants to add an additional $600 credit for children who are age 5 and under. This proposal comes straight from the HEROES Act, which was proposed and approved by the Democratic-controlled House of Representatives, but did not receive enough support from Republicans to become law. It would cost about $100 billion per year and would stay in effect for the duration of the pandemic. This increased tax credit will affect just about every single family with children in the entire country, except for the highest earners. It is phased out for individuals making more than $200,000 per year, and for couples filing jointly making more than $400,000 per year. Last but certainly not least is the return of the first-time homebuyers tax credit. This tax credit first came around back in 2008, signed into law by President George W. Bush, and later increased by President Barack Obama. It was in effect from 2008 through 2010 and offered first-time homebuyers a tax credit when they purchased their first home. The initial credit was $7,500, and Obama later raised it to $8,000. The purpose of the credit was to help give the housing market a jump start in the wake of the financial crisis at the time. Joe Biden wants to bring back the first-time homebuyers tax credit in a big way. He wants to make the tax credit up to $15,000, roughly twice what it was last time. And he wants to apply it immediately at the time of the purchase, rather than having to wait until tax season the following year. It's estimated that this tax credit will cost about $15 billion per year, and it will help first-time homebuyers begin to build wealth and enjoy the benefits of homeownership. I may be biased considering my age, but I believe that these three initiatives from Joe Biden will go a long way toward helping working-class families recover from the financial downturn caused by COVID-19. Increasing the child and dependent care tax credit is a great step in the right direction toward having a federally subsidized child care system without being overly generous. The expanded child tax credit will help families who have had to cut back their hours or purchase new laptops due to distance learning. And the first-time homebuyers tax credit will help people get into a home when the prices for real estate continue to climb, especially around cities. What do you think of Joe Biden's tax plan for working-class families? Let me know in the comments. If you enjoyed this video, you'll love parts 1 and 2 in this series on Joe Biden's tax plan, where I talk about how Joe Biden plans to increase taxes on the wealthiest Americans and the largest corporations. Check them out by clicking here or here. Thanks for watching. I'm Andrew Shear, and I'll see you next time.